on. Anyway, then big up yourself, family. Have a good one this weekend, yeah.
Alright, weekend. We've got big vibes today.
They got a big culture class going on in Atlanta this weekend, tomorrow. Yeah, man, watch it.
Come on, I need to start the morning right, innit?
Party
Come
tomorrow.
Alright. I'm telling you, it's better than starting your morning
Man's
with
got me
breakfast.
skanking in the
There you
AM.
go. That's how we need to start our day, with pure energy.
Come on.
Yeah, pure energy. Why not? Innit? It's better than
Need
starting
the
your day
air
with
horn, man.
long face, thinking about whatever dramas, whatever life in you. We start with some energy. All right, guys. Amazing day. I told you I'm done with good morning. It's amazing day. I need the whole day to be lit. Yeah, I need everything to happen that needs to happen in the day to happen, not just the morning. Yeah, and yeah, so there you go. Amazing day, guys. Let's get started. We're gonna have a look for the people that are funded, doing their funded challenge today. We're going to take some trades. And you know what's great? Let me tell you something what's great. I don't think we're missing a lot of people this one. It doesn't matter, all right? But you see, when you understand that you're waiting for good trades only, yeah? Have a look at this, what we was looking at yesterday. We saw this big, massive impulse, potential asset liquidity grab. And we saw the market come all the way down and close the imbalance. And now we're getting a huge retracement and looking like it wants to continue pushing in this direction. Quite interesting. Euro CHF, not something that we trade all the time, but we analyzed it yesterday. This is US 30 we're going to go into. But what I was saying is when you understand, guys, that the trading thing is not like you're playing PlayStation and you're trying to hit the button as many times as possible. Okay, it's about being able to understand what's a good trade from a bad trade, when you should be in the markets to when you're not in the markets. I had an analogy, as you know, I'm the metaphor analogy guy. I like to put it in a different picture example. If I could teach my kids something in regards to crossing the road, it would be when not to cross the road. All right, that would be the main thing. I'd definitely teach my kids when not to cross the road. Yeah, because that's going to keep them alive. All right, if I just taught them when to cross the road, that doesn't necessarily keep them alive. What about if when they approached the roadside, it was the time when they wasn't supposed to be crossing the road? But the whole point I'm making to you is that you have to, knowing when you don't have to be in the markets is a skill, and it is growth. I was talking to somebody and he was telling me about it, and I said, bro, I'm not gonna lie to you, it's growth. The fact that you haven't taken any trades yet, the fact that you've been sitting around patiently to understand what's going on, that is growth in your journey. Because previously, you get in front of these charts and you think it's like Atari. Yeah, you just want to be hitting the button, thinking to yourself that the more you hit the button, the more money you're going to make. Yeah, that is what people believe. The more trades they take, the more monies they're going to make. Which is not necessarily the case. Okay, let's have a look at this right now. I'm on a daily time frame. You can see the market was going sideways here daily. It says US 30. You want me to zoom all the way out? For the people that didn't see yesterday's session, don't understand how we trade. Look, I always start on the biggest time frame to understand the bigger picture. All right, the much bigger picture. Now let me explain something for the people that are out there going, oh my gosh, this guy's going back to 2004. Look, we understand that the markets change. We understand that 2004 is not 2024, and the world changes. However, we like to identify a picture and see what's going on. We like to build up this story. So I can see that the markets once upon a time was trading within this little, impulse in here. All right, trading within this little impulse in here. I can see the market pushed up into this level, given this range. All right, given these two yellow lines some validity. And the market was trading within this high, this low, this high. Then we can see this, anomaly over here. But because we understand the markets, we understand that this anomaly, was something that the whole world had to deal with, which was called, my little signy thingy-majiggy can work, was called COVID-19. Yeah? And who names these things? It's COVID-19. All right? How? And then we're seeing over here how the market then continued to make some higher highs and higher lows. So we create a range. We can create a range once again of how that market is moving. Okay? Touching some of these data points of how this market is moving. And we can see we've got some touches in here from here. Remember, these lines, when someone's going, but this line isn't doing this or that line isn't doing that, these lines are guides. They are guides. They are not, okay, when the market gets to this line, we're going to be hitting the button in the opposite direction. That's not what they are. They're guides. Because we can see how the market made a higher high, higher low, came up here, and it's broken structure to make a higher high over here. Now, could this market keep going all the way up here? It could. Could do. All right, it could do. Have a look at it here when it broke structure. Boom, it broke structure here, and then it continued pushing all the way up. So right now it's breaking structure here. Why couldn't it keep going up? Of course it could. All right, it's done it in the past. If I go down to my daily time frame, all right, because we are day traders, that doesn't mean that I want to be sitting around waiting for every single day for a candle, but this still informs me of price action. The market's making higher highs, higher lows, higher highs, went sideways a bit over here, okay? Then it made a higher high, higher low, higher high, higher low, higher high, went sideways a bit over here. We've made a higher high, i.e. an indication of where we might want to go. After we see an indication in the market, what do we normally see next? Let's go. Let's activate. Let's wake up. What do we see next after we see an indication?
Correction, bro.
A correction, where the market likes to correct and potentially close up imbalances or any type of inefficiencies it's seen. So this could be an indication on a daily time frame. This has all been correction coming back down here, closing up this imbalance, which was a 4-hour imbalance. And if you look at the 4-hour imbalance, it's a daily imbalance. It's a 4-hour imbalance, and we can see a 1-hour imbalance in it. So right now we've kind of dipped into the 4-hour imbalance, which is this bigger gray zone, and now we're in this orange zone here, which is an hour imbalance, right? 50% this market touched off that hour imbalance at the moment. And if we drop our time frame down further, what we're currently doing is we are patient traders. So we are waiting to see this market do something outside of this consolidation, all right, of the market going sideways. All right, the market deciding that it doesn't want to do jack squat diddly apart from do the hokey cokey in this range here. All right, it's kind of going, making this little sideways action. Okay, now we want to see what this market does. Is this market out of this little kind of area? And if I drop my time frame down to 15 minutes time frame, it looks clearer, that sideways action. Look, now it looks like, see over here, someone's looking at it going, is that really going sideways though? Is it? I'm not too sure if it's going sideways. It looks like it's doing something else. When I drop my time frame down in here, oh, you're like, oh yeah, I can see it. I can see this market is going sideways in here. Yeah, I can see it. I can see we're making, lower lows, lower highs, lower lows, equal highs, lower lows, highs, equal highs. We're going sideways. All right. So ultimately, what I want to do at this point in time is I want to see what happens when this market breaks outside of this sideways action. We also understand something that we've been going over, and there's a nice session that on YouTube at the moment. And remember, guys, those sessions are not going to be there forever. At some point, I am going to wipe them. All right. We can see here. We was understanding our sessions. Yeah, we was understanding our sessions. Okay, and though I am not overly impressed with this indicator because it was playing up the other day. Okay, who knows? Maybe they was doing something to it. We can see here is the Asian session. All right, and in the Asian session, the market we gave them characteristics like they were our children. All right, we gave them characters. And the characters we gave the different sessions, and this is the red, yellow, and white, meaning the Asian session, meaning the London session, meaning the New York session. And where you can see they overlap, that is an overlap in those sessions. And the characteristics that we gave them were when we're talking about US markets, our indices, our US 30s, etc. All right, sleeping in Asian session. You sleep, you kind of toss a little bit, turn, rub your feet together. That kind of energy. All right. You pull the covers over. There's some draft just licking at the back of your neck. So you have to pull the covers. Them way there. And then we have waking up in London session, where we start seeing some movement. You've kicked off the blanket. You've got up. You might have wiped the biscuit out of your eye. Yeah. Decided to walk down the stairs and do something. All right. And then over here, when New York, especially here in this overlap, so I'm going to put this over here, we're going to say awake. Yeah? You're awake. Oh, let's go capitals. Everything else was capitals. Let's go awake. All right? This is when you've got the most energy. This is when you're shilajit and your chaga and your moringa and everything, your protein powder, everything just hits at once and you are up. You are active. Yeah? And then when you start, normally this market, sometimes depending on what type of night you're going to have, what type of day you've had, sometimes this awakeness carries all the way through. Or sometimes you start to teeter off near the end of the night, you know, if I was to put an extra one here, if you didn't have extra report, it'd be like, I'm feeling a little tired. You know. Oh, let me just put tired in there. All right. Tired from your day. All right, near the tail end of this energy. These are the characteristics of the sessions. Yeah, look at them previously. Look, sleeping, just a little bit of tossing to the very small candles, not too much going on. Look, soon as this yellow line London kicks off around here, which someone else could turn around and say should have been about 8. Yeah, because obviously there's been lots of hours, you know, hour behind, hour ahead, whatever. Remember, let's just say around this area. Look, boom, big candles, big energy. Yeah, big energy, big candles starts to wake up. Yeah, and then when they're awake now, this overlap, the market actually breaks out of this structure, starts to move down here. Now this was Monday, so it wasn't a huge move, but right now, once again, look, have a look. Afterwards, starts getting a little bit tired. Yeah, protein powder, whatever it starts kicking, that starts wearing off. The fat burner starts wearing off. Yeah, the coffee starts wearing off. And then we got the creatine, whatever it may be, whatever's giving during the madness starts wearing off, and then we go back into we tired. Yeah, small candles, not really doing too much. Now London, between here and 8 o'clock, really, yeah, we're back now. Straight away you can see bigger candles, bigger red candles, bigger green candles forming, bigger green candles forming. We're waking up. Yeah. So understanding these sessions, these characters, especially if you trade particular pairs, because this is going to be different if we're trading NZDJPY or some other pair that isn't necessarily some other pair where they're going to be awake around those times. All right, it's going to be different. Maybe the Asian sessions when it's popping because I'm trading Asian pairs. All right, so understanding this is essential. You know, other things you can even couple this with, yeah, like them words, couple them with is you can hit volume on here. Volume, look at that. Yeah, oh, not volume. All right, you can go and click volume, and this will even give you some indications, you know, at times when this volume, the best example, let me go to an hour time frame here. You know, times when volume, the most amount of volume comes into the markets. Look, it's when we're awake. Look at this, waking up. That crossover has happened between London, New York. Boom, look at this volume in the market. This is when the volume is hitting the markets. Once again, look, boom, look at this volume in the market. Here, once again, look, boom, look at this volume at that crossover. And then look when it's low volume, look, sleeping. Look at it again, sleeping. Have a look again, sleeping, low volume. Now, would you want to go to the rave when the rave has low volume and it's just you and your brethren and your and Mary from the ends in the rave? You don't want to be there. There's no volume in that rave. There's nobody there. You want to be here when it's popping. Everything's going good. Yeah, people are flowing into the party. All type of gal you ain't never seen before. What type of man you've never seen before coming into the rave. Yeah, it's the same with these markets, unless you like a calmer party. You like it to be a little bit calmer. You don't want to get there when it's all active and all the bad man are in there and man are bouncing, man are fighting in the court. You don't want to be there then. Maybe you want to be there a bit later. All right, and you're gonna get here and you will see. I don't mind trading over here because it's slow. Or I'm gonna find a pair which has low volume because it's slow moving. But ultimately, what we aim for is to get in the markets when there is volume. To get in the markets when, when you place your order, you're going to get your food. You don't want to place your order and then the person's moving so slow. Like when you go to the Caribbean restaurant and nothing's prepared. Sorry to point out the Caribbean restaurant. I'm sorry. I'm going to have to. Nothing's prepared. And you got to tell you what, can I get a plant in? And let me have 2 festivals. And let me have a callaloo. And it's not even like it's not that it's not there. It's that they're going to go and make it for you now, which is good because we like fresh food. Yeah. But you're sitting there for all the time. Yeah. You're there for 25 minutes, half hour, whilst my man tries to whip up the callaloo and fry 2 bake and all them kind of things there. You don't if that shop had high volume, there'd be bakes sitting there because there'd be so many people coming in and out of the shop. He's got to have bakes on smash. He's got to have the plantain ready. He's already got a high. It makes sense in making a big dish of callaloo because people are coming in and out. There's lots of volume. So I know when I want to come and get my food. When there's lots of volume, I know there's going to be stuff. That's why McDonald's, when you go McDonald's, has always got burgers. When was the last time you went to McDonald's to go and get a cheeseburger and had to sit down there 25 minutes for a burger? Never, because they've got the volume. People are always coming to McDonald's, So they've always got some burgers sitting there. Now they are sitting there, and if you really want to get there, McDonald's ain't really food, yeah. But you get my point, yeah. You understand my point. That's the same principle here. We want to trade when there's volume, when things are happening. However, we can set ourselves up. We can analyze. We can understand. We can position ourselves before that time, and we can still benefit from waking up. And then we could possibly, because we understand and we've looked at the structure, we can benefit hugely from when we're awake. And if we get into trade when we're awake, it's possible that if that trade continues to trickle through and we're not that tired, maybe we've had extra coffee, we may benefit from, that market running up 5, 6 o'clock, 7 o'clock, running in our direction, 8 o'clock, possibly. Okay, so right now we're in US 30. We're looking at that US 30. Yesterday took a great little trade in the markets. It wasn't a great trade. It was a small little trade, all right? And it was ultimately, what pair was it? I think it wasn't a pair that we was looking at yesterday. I'm going to go back and look, can't remember, all right? But right now, I want to know what's going on right now, because on the bigger picture for US 30, let's have a look. For the people that can't remember what we're saying about this bigger picture, let's get rid of the volume. It's all up in our space, like that. And let's have a look. This market, we can see on the daily time frame, is bullish. Somebody can't tell me that the market's doing something else. It's bullish. That's not an opinion, that's a fact. It's making higher highs and higher lows and higher highs. Okay, it's a market that's this impulse here since November 2023. And just in case you haven't clocked, we are in March. Yeah, soon to be April. Okay, time is not waiting for nobody. Yeah, that this market is making higher highs and higher lows and higher highs and higher lows and high. Since that time frame, since all the way back in here in November, the market has been bullish, breaking structure, making higher highs. Until it does something different, I can't say now it's going to start making lower lows and breaking structure. I don't know. It hasn't shown me that yet. For it to show me that, it's going to have to break structure. Yeah, it's going to have to break down below these levels here and start doing something like this for me to start thinking to myself it's going to be doing something else. At the moment, that isn't my opinion. My opinion, this market's going to keep going up and 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 up forever and ever and ever and ever and ever until it decides to do something else. That's my opinion. Okay, it's not going to change until it shows me and does something else. And at that point in time, I have the ability to also do something else. So right now, this market made an indication out of this consolidation of what it might want to do. Then afterwards, we've seen a correction, it pushing back here, closing some potential imbalance. Now, I do not know whether or not it wants to close this imbalance some more, because it hasn't completely closed it. Look, it's got 50% of the hour imbalance. See where this green line is? Let me make this box green as well, because it'll make more sense then. Do that, yeah. 50%. It's come here to this 50% of this 1 hour imbalance. It might decide it wants to come down here and close that imbalance completely. It might decide it wants to be extremely cheeky and come all the way down here into the 50% range of this consolidation, which would be approximately, remember my lines are just guides, they're not drawn with laser accuracy, okay? Approximately, it could decide to get all the way down here. And I could still think to myself, this market still wants to go up. Okay? But at the moment, we are teetering and we're sitting in here in this 50% range of this first daily, 4 hour and 1 hour imbalance. I want to see whether or not this market wants to now decide I've had enough. That's enough of me, being efficient. And I want to push back up in here. Or is this market going to dance around here for a little bit? Maybe push down into here, and then decide it wants to go. Okay, this is market going to say, you know what, I'm not going to lie to you, Jay. Jeez, there's some fundamental factors and other issues make me want to come all the way down here before going up here. This is market want to say, you know what, in fact, I just want to keep going all the way down here. I've had enough of going up. Because on the bigger picture, let me show you the bigger picture. On the bigger picture, our bigger Russian doll, we are in the middle of this bigger pink range. Meaning, if the market wants to, it could say, I want to come down here first, Jay. And then I'm going to go this way. And it would still be bullish. If for the next 2 weeks, it decides to start coming all the way down here to the tune of, 4,000 pips. it would still be an overall bullish market. This would just be a big old correction because of all of these green candles causing some imbalance. Can't see the imbalances. Have a look. Look at them. Imbalance. Market could decide to come down in there if it wants to. I don't know, because we're sitting in the middle of a range, which ultimately is equilibrium. It's ultimately not the best place to take a trade from. But on it, this is such a big picture. Going back on the monthly, every one of these candles is a month in time. As day traders, we can definitely prosper before, you know, this kind of affects us. We've got enough market structure and price action to do what we're doing. But from the bigger picture, that could happen. The market could decide that it just wants to start rolling here. You know, why have I said that? Look, it's done it before. Pushed up into here, into the middle of the section here, and then said, in fact, yeah, let's go sideways. Let's go back down here and touch this pink line again. Yeah, it's done it before. Why couldn't it do it again? It could do it again. Okay? It could decide it wants to get narrow here and just trading within a little range and then decide it wants to start breaking off it. I don't know. I don't know the future. If somebody does know the future, they should holler at me. Yeah, they should let me know. Okay? So, we're here now. Let me get rid of this for this indicator. But right now, if you are looking to take some trades, well, I would definitely advise you go and look at US 30. Slap a little box around what's currently going on, which is currently looking like it's breaking structure. I was just about to put my indicators on. Looks like maybe we're pushing above this level. All right. And wait for your alerts to ring. So my alerts would have just started ringing. We're getting a little push out up over here on the 50-minute time frame. Bullish. Okay. Now what I want to see is I want to see a nice close above this wick. This little John Wick over here. I want to see a little close. Let me see on a 5-minute time frame. Let me see how close we are, tight we are. Ooh. Well. See, I would have previously put the range like this and like this. Why? This is the last high before this lowest point. So that would be our range. This was a close. This was a close outside of that range, but the market actually pushed all the way down here and broke this minor structure over here. Okay. So personally, if this closes above here, which we haven't closed yet on the 5-minute time frame, this is a little John Wick. Okay. I want to see a close above here as an indication because it starts again. For me on the 5-minute time frame, if this was just here, broke structure, closed, and then it retraced and closed back above, that's fine. But the fact that it came and violated this little bit of structure here by going down here means we start again. Meaning I'm looking for another indication, closure, another correction, another continuation on the 5-minute time frame. On the 15-minute time frame, I'm looking for my indication also because this was just a little John Wick. I don't want to see a little John Wick. I want to see a solid candle. All right. I want to see a candle closing outside of this range. Until then, I am going to be patient. I'm going to wait for what I'm waiting for. Look, on the 5-minute time frame, we did get a closure outside of this range, this blue box. And I'm expecting to see a correction and then a continuation. The correction cannot violate previous structure. See, if I was drawing some lines in here like this, why would I draw that line? Because that's the last low before the highest point. But the market came and violated that structure. Look, alarms going off, violating the structure. And then it's come all the way back up here and it's doing the hokey cokey. So I need some more confirmation, bro. I don't trust you. I'm sorry, I don't trust you. Yeah, I need to see some more confirmation, some more confluence. Build my trust. Yeah. So right now on the 5-minute, or you want to say in the 50-minute, or both, hopefully. Look, in the next 3 minutes, we're going to get both. We're going to get a 5-minute close and a 15-minute close because it's going to be 9 o'clock on the dot. Yeah. And 5 and 15 divide straight into an hour. Okay. So that would be, multiple time frame confirmation of a closure. And at that point in time, I'm going to be able to drop my time frame and look for a nice correction, hopefully a small one, and then a nice continuation, and then be able to make a decision whether I want to be very aggressive below the last low, or I want to be more conservative below, this kind of area here, which is 50% of the imbalance and below this low. I don't know at the moment, but I'm waiting to see. I'm going to pop a little alert in here so that I'm not just sitting around here with my mouth open. Crossing up. I'm also going to pop an alert all the way down here if the market just starts to do some other stuff. Crosses down. Does everybody understand my breakdown on my analysis of why I've got these alerts either side of here, what I'm waiting for, what I said in regards to this time frame confirmation. Look at the time, 8:58 and 9 seconds. The only thing that divides into 8:58 is what? 1 and 2. Yeah, 1 and 2 minute confirmations. But as soon as we hit 9 o'clock, lots of things divide into 9 o'clock, giving me that multiple. Because you have to understand, what do I mean? And what's the point of that? This is the point of that, just to explain it to you. You might be sitting down there looking for a 5-minute close or a 1-minute close or 2. But there is some traders out here that are only trading based upon seeing an hour close. They are waiting for an hour close above some sort of structure. Or they're waiting for a half an hour close above some sort of structure. Or they're waiting for a 15-minute close above some sort of structure. And when that closure comes, they're going to pile in. They're going to hit the button, boom, 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 boom. And those orders create demand, and that demand will move the markets. Whereas at 8:59, man, are like, yeah, who cares? I'm not waiting for a 1-minute close out here. Who cares? Because this is why that time confluence and looking for candles to close is important. Yeah, it's significant. Okay, so because I've got my alert in above here because I was waiting for some sort of closure on a 50-minute or 5-minute. I haven't got it yet. I've just got all this John Wick action. Yeah, I've just got all of this John Wick action. Let's go look at something else real quick. And is there any particular pair somebody want to look at? Is there a particular pair anyone wants to look at?
On gold, we ain't looked at gold in a few sessions.
Cool, let's look at gold. Yeah, with a little intermission. You ready?
Walk past me, would I get high? She said, me man want a coffee or sitting. But when him come home, say, me and Mrs. Right. Get man for him, pay the house and land and run it.
Ladies, give me a walk out right now. Walk out. Walk around the living room.
Why not? Yeah, why not? All right, so gold. All right, so first and foremost, what I'm going to do is I'm going to hit delete. I'm going to clear. It's not one I made earlier. And I cannot start on gold just looking at the 5-minute time frame. I need to see that bigger picture, understand walk one. All right, so I'm going to zoom straight up. Go to my daily, go to my weekly if I have to. If it's the candles, this chart's looking mad like this, I'm going to click this little cog over here and just click auto, yeah? Or you can click reset. This is going to reset everything. And I'm going to say, okay, I'm on a daily time. I'm just going all the way back to 2000. I want to go even further than that. I'm going to go my weekly. I mean, every candle is a week in time. I want to see what's been going on with gold. Gold's been looking like a bullish investment. Yeah, it's been looking like something that has been going up. Here's a first little angle of incidence. Then they actually said, you know what, we're done with that. We need to accelerate. We dropped a gear, started accelerating, all right, into this bullish action, all right. And even this might be, our second Russian dog, yeah. And then we can see that we can put a ceiling on this if we wanted, like this, okay. And then we could turn around and we could put another little line in here. Have a look underneath here, touching those data points. I'm interested in these bottom ends when the market's bullish. If it was bearish, I'll be interested in the top ends. So we can see even like this, the market's moved over here in this kind of angle. Yeah, bearing in mind this is the weekly time frame, so don't get twisted. These data points are significant. This market was down here for weeks. Yeah, this isn't just like some joke data point. The market was down here for weeks. The market was down here for weeks. Down here for weeks. Yeah, and then we're going to see the market do this, start to push up in this type of angle. This would be another little Russian dot. Yeah, tapping into this angle here, like so, from here to here. Okay, now we can see something that's common on the top end. On the top end, we had something here we called the three kings. This guy, this guy, and this guy, creating a tremendous amount of liquidity, pool of money, where people have been like, yeah, I'm selling from this level, selling from this level, I'm selling from this level. Every time it gets to that level, they're selling because they've seen it be such a strong level of quote unquote resistance. And what the market likes to do is say, oh yeah, I think you're wicked, but that's what people remember. We had that analogy, people went and hid there, we make it blue. That's the sea, that's the water, all right? And over the other side of the water, we had, lions and bears and all these mythical stories that stop people from going there. So a couple clever people thought to themselves, you know what, if nobody wants to go over that side, I'm going to bury my money there because nobody's going to find it. All right, they went and buried their money over here. But there was some little clever individual that plotted. People are burying their money other side of the water, other side of the lake, because of all of these stories they've heard of this, this part of the planet. They started putting all their money and burying it over here. Look, yeah, my money's here, safekeeping. Look at all of this gold. But Jivan was sneaky and he's like, listen, I think I could get across the water lash everybody's money, get back over here before waking up the bears, before notifying the dragons, before anything happened. So we see this liquidity grab. Nam, 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 nam. This is G-Van lashing all the money, eating all of this, eating that. All this money. You man thought you could hide it from me? Gone. And then we see the market run in the opposite direction, ran over here. All right. Then what it does, it throws the wallet away, gets rid of all the evidence, puts the money in his pocket, and then walks back past you like he didn't know what happened. He even comes and helps with the search. Oh, what happened, guys? What happened? Your money got... Oh, is it? Your money got stolen. Do you want me to help? And he walks straight past after lashing, after making this liquidity grab. Walked straight past like he had nothing to do with it. And now we're seeing this gold market up into these levels. Now, this move from down here, we can see from a weekly perspective, 1, 2, 3 weeks of bullish action, creating huge imbalance that we've seen in here. Now, the market doesn't necessarily need to come all the way back down here and close up every single imbalance, but we have to be aware that this is imbalance. This in the back of our mind is like the market could want to come back down here and, do some damage there, close up that inefficiency. That's how we have to look at it. Let's drop our time frame down to our daily so we can see more stuff. More stuff. We can see that market pushing up. Doing this. Now I have to draw my line like this. This is another Russian doll. I have to draw my line like this. Why? I'm touching this data point before this highest point over here. Yeah. I'm touching this last low before this highest high. Okay. And I'm going to make that slightly... No, I'm not going to leave it white, in fact. Okay. And that then becomes this little range that the market's been trading within. Like so. Okay. If I drop down to my 4 hour now, give me some more information. Okay, now we can see even more stuff. See higher highs, higher lows, higher highs. Markets come over here, made a higher low, but at the moment, price is ever so slightly leaking out of the market. Price is leaking out of the market ever so slightly, and ever so slightly going sideways, in my opinion. Right now, I'd like to just draw a little bit of a box below this lowest point, this little wick that you can see here, and the highest point before then, like so. Let me double click. Let me take that off and make it a color so we can identify it. Green. Now you might not be able to see that, like, raw, that's looking small. I'm not too sure. I wouldn't have seen that. But I can see how the market, boom, exploded from here with big green candles. Yeah. Giving an indication above structure and previous side structure over here, what it wants to do. Then it came down here and it closed the imbalance and started to go sideways. Have a look at this now. Look, 1 hour. Looks sideways to me. Looks a little bit sideways to me. That 1 hour is in here. It's in this range between this high. I can draw a little bit better. And this low. We've got a little bit of a wickedy wick happening, a little John Wick happening over here. But I'd like to see a real closure above this level to let me know that we've done with going in here. Now, on a smaller time frame on this hour, yeah, you could decide you want to start drawing some lines in here. You know, not the most necessary, but you could do. All right. Could decide to put a top end in if you really wanted to. You could do. All right. But the market is in this green box at the moment. If I could drop down to my 15-minute time frame, giving us even more information, I'd really like to see what it's going to go and do outside of this green box. Meaning, show me an indication. Yeah? Close up here above this little John Wick over here. Show me an indication of what you want to do. Show me some sort of correction. And then show me some sort of continuation. And if you're wicked and bad, you can get in on the continuation early. Or look, if you're wicked, let me show you something. When I say I'm wicked and bad, I've said, you hear me say it a few times. What I mean by that is this: the market is going sideways like this. Okay, we're waiting for an indication. Now, if this indication was huge, if you're wicked and bad, you could get in on the correction, trading it back down into these levels here. If you're wicked and bad, you could get in on the continuation early. When it starts to break structure here, obviously I'm not showing the previous structure is broken, but here. And if you're safe and you're consistent, you could get in when that market closes above this level here with your stop below this level here. None of them are better than the others. They all carry their risks, they all carry their rewards. Here, you're trading against what the market is indicated it wants to do. But then again, you might find that it doesn't want to indicate there, and the market was doing a little liquidity grab, nam, 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 and then you might find that this market might continue. When you think it's yourself, oh, you might have to get out, you might find the market says, bro, I'm not going to lie to you, bro, we had enough. We are going to keep falling to hell. And you're like, whoa, bro, this is a 1 to 25 trade I got in up here, and I'm like, rah, you that. But when you got in here, remember, in here you would have had to have seen some structure in here to see our strategy indicate, correct, and continue to get in. You can't just get in on the basis you saw a little McDonald's M over here. Yeah, and you need to understand that if you get in here, the market could easily start pushing down here and then kick back up into these levels before deciding to go. So you have to have balls of steel, or have your stop loss in the right place. But you have to understand how these markets move. But then if we're thinking that this was an indication above this little level here, this was an indication. When it comes back into this level here, maybe you're going to be expecting to see that continuation happen. So this was the correction that you just traded because you was eager and you were skillful enough to do so. And then you say, you know what, now I think the market's going to continue. I'll take my profit as soon as I start seeing structure breaking against me. And then I see it breaking structure. And once again, for you to get into that trade, you would have had to have seen some sort of structure in here being broken. And then you'd have to be looking for that indication, be looking for that correction, and then that continuation. Now you're trading it back up here, at least to these equal highs, but hopefully making a higher high, meaning that this made a low, higher high, higher low, higher high. So this is what I'm saying to you when you hear certain things. Like, I might tell you guys about a move, and before that move's happened, you might hear that I'm in the trade. Because I'm in the trade from here, trading it back down into this level. Or I'm in the trade from here, trading it back up to where we're waiting for that closure to happen above that high. Now this, like I said, carries its own risks, because the market could decide to go whoopsie before it decides to go this way. And the market could decide to go this way before it decides to go this way. Yeah, because you're on a smaller time frame and you're more victim to market volatility. Because on a larger time frame, this little M will just look like one spike. Yeah, because we would have combined these 4 candles, these 4 15-minute candles into one 1 hour candle. That is just a one spike. But on a smaller time, if I get in here saying, yeah, I'm going to get in this little tiny little 5-minute entry, well, I have to understand that it has risk. You know, like the, high risk, high reward. Yeah, that's how you trade. That's fine, but you need to understand. You need to manage your risk in regards to your amount you're risking, your risk amount. Yeah, so it should be fixed. It's 1% regardless of what you're doing. Okay, it's around 1% whether you got 100 pip stop. It's 1% whether you got a 2 pip stop. 1%. Yeah, or less. Okay, so right about now here, I'm gonna pop an alert in over here. I'm not gonna sit here with my mouth open. I'm gonna pop an alert to see what gold does. Crossing up, and I'll also pop an alert at 50% if the market says, nah, Jay, just ramping. Only joking. I want to do something else. Crossing down. And when that alert rings, I'm going to be waiting for us to see an indication. Yeah. And I want to see, to be fair, I really want to see a correction in the continuation, like outside of this market. When I say this market, I'm talking about outside of this range. In an ideal scenario, I'd like to see that market moving outside of this range. You know, here. Now I get an indication, correction, continuation at the top of the range. It's kind of going against one of my rules, because look, I'm kind of buying into a wall. Ideally, I'd like to either redraw these lines because I've drawn them incorrectly, which I can see that maybe slightly off. Yeah. Or I want to see this indication, correction, continuation, when price breaks outside of the market. Now, at the moment, this market is sideways here, but we are seeing these higher highs on the smaller time frame, higher lows, higher highs, higher lows, and that is creating a range, this green range ultimately, that I'm able to say that the market is currently, on a smaller time frame, though we are sideways on a larger time frame. On a smaller time frame, we're making higher highs and higher lows. So therefore, this gives me some little range, and I'm not gonna, if I do hit the button here inside that range, my stop, because I really think it's going up now because I've seen indicate, correct, continued, but I'm still inside the range, my stop is going to have to be below here. Because if I'm wrong, the market should come back down into these levels, touch back on my green line, not stop me out, and then get back up here. Makes sense, right? Does it make sense?
Yeah, 100% sense.
Yeah. So that's the point. So don't get twisted. It's like we might see a lovely little indication here on a small time frame, a little correction here on a small time frame, a little continuation here on a small time frame. But based upon our rules, am I buying the trainers expensive? I am. Even though I might have seen it on a small time frame, maybe that small time frame is only supposed to give me. Oh, maybe that small time frame was only supposed to give me this reward, this price. Maybe. Yeah, maybe that small time frame is only supposed to come up in here. Look, closing up some of these little minor imbalances over here. If you can't see them, have a look. See that little green line that comes here? Look, maybe that small time frame is only supposed to come up in here and close this little imbalance. And then it's going to come all the way back down to this green line before this. Maybe. Because when you're in this small, you have to respect the bigger boss. Like I spoke to you the other day. I said, this guy here just runs his street. He doesn't run. When he comes up here, he comes to the guy who runs the area. And then when he goes over here, he goes to the guy who runs the, the borough. So therefore, maybe this little, if I'm not saying this happens, it hasn't happened, but on a smaller time, if I was looking at this on maybe a 3 minute or 1 minute time frame, we might see a little 1 minute retracement, 1 minute correction, and someone says, Jay, but I've traded it. Look, it's indicated correctly continue. Yes, but on a small time frame, it has to give respect. It's to put some respect on its name of the other time frames. Yeah, and then you always have to think to yourself, your rules, your understanding of your strategy. Like you want to get the ticks in all the boxes. If there's one tick missing, like you're like, yeah, it did indicate it corrected and it continued, but I was buying straight into a wall. Man might be like, yeah. Well, your fault, bro. It's just on you. It's your business. Yeah. So it's about getting that grasp of, you see the way I cut through these markets when I'm analyzing. You don't hear me stutter. I don't stutter or if there is something that's looking a bit like blurry, I'm just like, I don't like it, I'm gonna leave it alone. But you have to be able to cut through them and understand what's going on so that you can try and make a decision, because even then your decision might be incorrect because you don't know. If you're finding it difficult to break down these markets how I do, from a larger time frame, understanding the bigger picture, putting in some lines if you have to. Like, guys, however way you want to draw your lines and whatever you want to do on your screen is cool. Once you can read it, yeah, it's your playbooks, your hieroglyphics, it's nobody else's. Yeah, but the reality is that you need to be able to understand what's happening in the markets. If you don't have a clue what's happening in the markets, like, step away from the trigger, bro. Like, you got no driver's license. How are you behind the wheel? You don't know how to drive. Like, the fact that you've got a car, or you've got access to a car, doesn't mean that you're supposed to be out here driving on the roads where there's women and children walking past and trying to just get from A to B, and you just don't know how to drive and you're behind the wheel of a Range Rover. It doesn't work like that. You have to understand how to drive the mechanics of these markets before you start to just pull the trigger. And I know, because it's money, the very first thing people want to do is, yeah, man, I'm gonna take a trade today. And God forbid that that trade goes well and they make some money. Ooh, at that point in time, they know it. Oh, they don't need you. All they did is click their heels, spun around 3 times, hopped on one leg and pressed buy, and they made a 1 to 4. So on that basis, why do they need you? Why do I need to come to Breakfast Club every morning, Jay? Why should I take the time to understand the markets, Jay? Why should I go over here and look at the fundamental news that's happening in the markets? Why? Last time I took a trade, it went well. I'm the man. I've got my own course. Yeah? You have to be able to build up consistency and understand what you are doing. Okay? So we can see today's Tuesday, March 26, 2024. Go and look at US 30. Have a look. Our US 30 is finally pushing up here on a 15-minute time frame. Got 12 minutes for that 15-minute candle to close. On a 5-minute time frame, we've got 2 minutes and 21 for that candle to close. And like I said to you, I really want to see a clean closure here. Hopefully it'll come now, yeah, above this level. And I want to see what it does afterwards. And if that means that market starts to run away up here, so be it, man.
You're saying gold and US 30 correlate then? They must.
Well, look.
Gold went up and US 30 just went up similar kind of time.
I hear you, but you have to understand it's like this. There's different types of correlations, isn't it? It's like you can fall in and out of sync with somebody, and it could be you're in sync on the 5-minute time frame and you're out of sync on the hour time. Now, if you go over here, look at this my Forex book. They have something here which is in the market section. It's called correlations. And if you click correlations, the reason why they have this time frame setting is they're essentially saying that markets correlate on different time frames. So you might find that there's a correlation between, look, for example, if I look, find currencies with a correlation higher than, let's say, 80%. So Euro USD might correlate with AED CAD positively. That's why it hasn't got a minus sign, and it's green. 86.9% on the daily. But if I drop this to on the 5-minute chart, there's only a 61.4% correlation with AED CAD. So meaning that they are falling in and out of sync with each other. So though you might see one move up and the other one move up, I'm not to be rude or nothing, these markets can only go up or down. So at the end of the day, the fact that you saw it for 2 seconds, they're both going up at the same time, does not necessarily mean that they're correlated. Now, what you want to find is there are definitely markets that are correlated with each other. There are. Okay. And like I said, for argument's sake, let's go here and put in 90% correlation. Let's go to, on a hour time frame. This is showing that GJ and AJ have a 90.3% correlation. On an hour time frame. So if you was looking at, some hour structure, placing your stop below an hour low, targeting an hour high, then maybe this would be relevant that if you was in GJ for the buy, you should probably not be in AJ for the sell, because they're doing the same thing in an hour time frame. Like if you're going to do that, you're in GJ. If you said to me, yeah, Jay, I'm in GJ for the sell, I'm in AJ for the buy, and I said to you, where did you place your stop? You said that below this hour low. I'd probably say one of them's probably going to be wrong, bro. You get what I'm saying? But at the same time, if I drop this time frame down and you was in here on a 5-minute time frame, look at the correlations, just dropped to 64%. It was just 90.3. Meaning that AJ might move first, or AJ might do something first, or the other one might do something first. But either way, they're not 90% correlated on a 5-minute time frame. So you see the difference. So it like, this is why, in my opinion, when someone tells me they're buying something and someone tells me they're selling something, they can both be right. Because what time frame are you buying it on? Where's your stop loss? And what time? If someone says, they're in it and they're swinging the markets, they think that these markets are going to go up over the next week, and they go down over the next week, well, then that's different. But then again, it still might not be different, because where's their targets? It might have gone up first, then gone down. And he said, this is a profitable trade for me. And you're like, wait a minute, but the markets went down. But I got 1 to 4. And then it stopped me out for, 3, and he still made money. So this is why, like I said to you, all the signals, all the you can trade like me, it's bruv, can't trade like me. You can learn my strategy and understand how you use it, and seeing the way how you can use it in the market. I can tell you that we're looking at this US 30 trade, and for whatever reason you don't get in. Here we've got a 5-minute close here, which is good indication. On the 15-minute time frame, we've got 8 minutes before this 15-minute candle closes, so that's fine. I'm just going to wait. I might turn around and say to you, I'm looking at this. We might end the call in a minute. You don't get in because you didn't see something that you wanted to see, or maybe you wanted to trade it. And I'm going to turn around and say to you, boom, I got in and I rode this trade all the way to here. And you're going to say, but Jay, I never saw the thing. And I'm saying, well, bro, I'm not going to lie to you. I was looking on a 2-minute time frame, and this is how to, we can all be right. It's not when it comes to trading, if it makes money, it makes sense. You understand what I'm saying? If you said to me that what you do, Jay, is, I'm not going to lie to you, Jay, I just mark up these lines, I buy low and I sell high, and I've been doing that for the last year, and I've been profitable. I bought myself a nice car, and I was going to say, bro, let me tell you something. Don't listen to me. Keep doing what you're doing, bro. Keep doing whatever you're doing, because it's evidently working. It's no point me trying to come in here and tell you should look at the sessions and look at this and with indication. If all you've been doing is closing your eyes and hitting the bottom, and it's been working for the last 6 months, if that's what you've been doing, keep going. But more than likely, it's not going to be the case. More than likely, you're going to have to take into consideration your risk management. More than likely, you're going to want to trade when there's some volume. More than likely, you're going to want to see some confirmation before you do something. More than likely, you don't want to be on the 1 minute, 30-second time frame, because the volatility of it wicking in one direction and doing something is going to stop you out. More than likely. But you're always going to hear somebody on YouTube turning around and saying to you something different. Which, good for them. That's one thing that I have realized. You cannot watch nobody in this trading journey. For a start, they could be talking fraff. For a start, majority of this trading in industry is a whole junicle. They're selling lifestyle. Most people sell lifestyle and then sell a course. You understand what I'm saying? But let me tell you something. For example, myself, I can only talk about myself. I put the work in every morning. And I learn every morning in front of you, unapologetically doing these sessions every morning, trying to teach you guys what I know. Do I know everything? No. Have I pulled out billions out of the markets? No. But can I teach you something that you don't know? Yes.
100%.
You understand what I'm saying? Did your science teacher or your English teacher or your maths teacher, was they a physicist? Was they launching missiles into space because they taught maths? Was your English teacher a poet? And out here writing sonnets and stuff like that? No, but can they teach you more than you know? Yes, and that's what you pay for. You pay for them being able to teach you something you don't know. If you believe that you've outshone the master, or you've grown, that you know more than your tutor, you know what you do? You get another tutor, or you do your own thing. But the reality is that this stuff, I am showing you stuff based upon fundamentals and principles. You've never heard me be out here turning around and saying to you, yeah, guys, we're going to flip accounts today, guys. So we're going to risk 50% because we just want to flip an account. I'm going to show you to make your £1,000 into £4,000. We're going to flip it this month. Because that isn't sustainable. That isn't a strategy. That's the national lottery. That isn't teaching you nothing. Even if you did flip your account and you might be happy with man for the first month, in the second month, when you go and put an extra $5,000 in there, because now you think you're an account flipper, you're going to blow all that money. And the month after, it's come back to me and said, Draymond, like, because of what you showed me, bro, I'm homeless. I'm living underneath a bridge, and that's what you're gonna say to man. I'm gonna say, what am I gonna say? You can't come and live with me. Sorry, I'm gonna be like, your business. So I'm teaching the core factors that you're gonna be able to come away from Unity when you're in 5 years' time, in 10 years' time, in 3 years' time, and be like, I know how to trade to the point where I can teach my brethren what's going on here. Because I was taught in a proper dojo. Learning Kung Fu off of YouTube. I was in the dojo kicking the wall for time. Do you understand what I'm saying? Yeah. So that's what this is about. And I like the fact that I'm seeing new members that are early in here that are grasping the concepts. Have a look right now. You see, even though I'm seeing this thing ringing on the US 30, I said this is a 5-minute close over here, our first close. But I'm saying, you know what? True, I've waited anyway. A 15-minute close is happening in 4 minutes. I'm going to wait to see what happens in this 15-minute close because we're coming up to a level of structure over here, and which happens to be 50% over here of this previous consolidation range. And remember what I said was my concern. My concern is on the US 30, it hasn't come down here and completely closed this imbalance. There's still this little space down here. Look, if I put my little indicator on, look, there's still this big old red space of imbalance, inefficiency still in the markets. And then this big old candlestick zone or order block sitting here. So do not get confused. Like this market couldn't come up here and right now, this minute, decide that this was the indication and we're waiting for the correction and it starts to correct and it just doesn't continue. It just starts coming down here. It could definitely do that. Yeah. So me, they're getting all excited now, like, oh, it's gone, and thinking, trying to FOMO in, fear of missing out, just hit the button because I'm thinking to myself, I've been waiting for this thing and it's just gone. Nah, bro. I got my rules. I'm easy. I've got a 5-minute closure above here at the moment, which is going to align with 15-minute closure in the next 3 minutes. Okay. I'm calm. If this comes down in here and closes this little imbalance on a 5-minute time frame and potentially this imbalance that might occur on a 15-minute time frame, then I start seeing it coming back up here, closing above. Cool. I'll get in for the buy. I'll place my stop either aggressively below that last low or safest place all the way down here in the 50%. If it doesn't do that and comes and starts to break structure on a 5-minute time frame, potentially coming down here, breaking structure, doing this and doing this, I'm going to be thinking to myself that maybe the market's trying to come all the way back down. But even then, I'd like to wait before it to break this 50% level of this previous range and this structure here and see what it does here. Is it going to do this and then do this and then do this? Yeah. And then maybe I'd wait for it to break, for this to actually break outside that previous range. But to be fair, I wouldn't. I'll enter here because this is already broken up in here and then it's already broken back down in here. It's violated this range such and this violated structure. So maybe I'll get in here. All right. But the point is, I'm going to read and react, and I have this narrative. And once I can control my emotions, I can be patient. I can understand that though my account might only have X amount of money in it right now, it's not going to have any more money in it if I don't learn this skill. So if you want to force the process and think to yourself, this is taking too long, I'm not making my dough from here, this ain't gonna be, that's fine. That's a great attitude to take. But let me tell you something, whatever you're looking at in life, the person who's achieved great success in it has not done it by fluke or by accident. They've more than likely done it by sweat, blood, and tears. And if they have done it by accident, it won't last. They can't do it again. It was an accident. Yeah? There's a guy, you've played football, you've accidentally just hurled the ball and it's gone top corner. And you're like, wow, that was my best goal ever, my goal of the season. It's an accident. You're not in training, practicing top beans 100 times over. When you see the professionals, over and over, they put the bins in the corner of the goal. Over and over and over again, get the ball into the corner of the goal, corner of the goal, corner of the goal. So when they take that free kick and they put it top beans, it's not an accident. They've been practicing, doing exactly that thing. But when you do it and you've never practiced before, you just hoofed the ball and it went top corner, it was an accident. And when it comes to these markets, you can hit a trade that makes you some money by accident. Is that going to continue? Is that going to be something where you're continuing prosperous? No, bro. Now have a look here what I said. This market has now, price has now broken outside of that range. So that problem that concern I was having with, I think maybe gold or whatever it was, I might have been with here, can't remember, of taking a trade at the top of this range here, which is premium, it's now gone. Because we've broken outside of this little impulse. And how did I draw this range? By touching some data points that were under here. This line, I'm putting out a parallel line. We've broken outside of the market now. So if it comes and it corrects and then continues, we're outside of the constraints of this range, these two white lines. Does that make sense? We've broken free of this range. If we correct here and then continue back above here, does that make sense? Or have I lost somebody?
Say that last bit again, that last bit about breaking the line.
So we was trading within this range, these two dotted white lines.
Yep.
If I was to hit the button here for a buy, I'm kind of going against my own rules because I'm buying at the top of this range. Mm-hmm. But now we've bursted a little worm head's bursted outside of the range. So if we now correct and do this, I am no longer have that concern that I'm taking a trade at the top of the range. I've broken through that range. I've broke the glass ceiling. So now anything's possible. Now this market's on some next trajectory doing this, for all I know.
But really, you'd be looking to sell to go back into the consolidation range if you was going safer now.
Got it. Go say it again.
I said, hold on.
So
you see right now.
Right now we've indicated.
Yeah, we've indicated, but I'm saying, me looking at that, maybe it's just my eyes. I would be looking for if it doesn't continue going up, I'd wait for it to come back down into that range to go to the bottom. So I'd be going in for the sell if it indicated otherwise.
If it indicated and broke structure bearishly, and like I said to you, right now on a 5-minute time frame, here is some structure. You can't see anything else on a 5-minute time frame. So if this market, came down here and violated this structure and then did this, and maybe it was just, I don't know, doing something over here, but at the same time, this is where the structure is, and by the time it violates the structure, you're back at the bottom of the range again. Or you're bottom of this impulse between these white lines. So right now, what I am waiting for is I'm waiting to see if this market, because it doesn't have to, it might just run away from me, if this market is going to correct. And when it corrects, it cannot violate this structure. If it violates this structure, I'm concerned. I could drop my time frame down to a 1-minute time frame to get more information. Look, we can see some structure in here, but we can also see a little bit of imbalance in here. This market on a 1-minute time frame, I wouldn't want it violating this structure here. But on a 5-minute time frame, I want to see some sort of red candles coming in this direction and then coming back up in here. And when it closes above here, boom, I'm in for the buy. Now if it starts to break down in here, like I said to you, because we've broken outside of this range, let me make it a bit thicker because it's getting a bit confusing. Like we was trading within this white range. Now we've broken outside of it, but it's like man, I just taken the chains off of the horse. It could bolt and go this way. It could bolt. Previously, it was confined. You hear the story about the elephant who's nailed to a spot. It was nailed to this range previously. It's the only place it could dance with. And then it got brave and realized, well, wait a minute, that ceiling actually isn't that strong, and it broke that ceiling. So the point I'm making to you is if it now breaks that ceiling and it's on new ground now, it was on mud, now it's grass. If it comes back down here to check to see, wait a minute, is this okay? Am I not going to get shot? Is this okay that I can sit on the grass? If it decides, you know what, nobody's shooting at me, the grass feels good under my foot, and it starts to go back in this direction, well then I'm in. I'm like, you know what, this is confirmed that it wants to go in this direction. Because it's broken.
That's the new structure.
That's the new structure. Now it's on some new stuff. Before, its whole brain was wired to trade in within. It was nailed to a spot. It was like, you know, we can't get past this place. This is our playground. We can't get out of this playground. We can't get out of this playground. We're just playing within this range. But now it's got brave. Who knows what happened? I don't know. It saw a little kink in the arm. The fence had a little gap in it. I don't know. It's now broken outside of that range. So this wall now, how are you going to put confidence in this wall? You can't put any confidence in this wall. This wall's gone. It's busted through that. Unless this is just a liquidity grab, which liquidity grabs, you normally see them with more speed and more intention. But either way, I'm not saying that just because it's broke up here, I'm hitting the button. I'm still waiting for my strategy. My strategy is I'd like to see some sort of correction. Whether that correction is going to come all the way down into this imbalance or, you know, all the way down to, I'm trying to see some sort of correction. Then I'm trying to see some sort of continuation. Now, what I was saying to yourself is this. If I was wicked and bad, can you see this? And I took this as on a bigger picture. This was the indication on a bigger picture before the session started. Can you see here on a 5-minute time frame? And then this came all the way down here. Let me not say 5-minute picture time frame. On a bigger time frame, when this market came down here to the bottom of this, it violated the structure. Sorry, we've spoken about that already. Okay, it violated the structure. You haven't got any information to get in earlier, unless you're on a very small time frame, which we don't want to go on. So right now, I'm cool. We're pushing up here. We are cool. I don't have no issues. Why? Because the bigger picture is this market. Even if this market wants to come down first, it might be going up to close some of this imbalance now. There's a little imbalance in here. Okay, there's imbalance in here. It might be pushing all the way up here. Even if it wants to come down, it might push up here first. And on the US 30, it pushing up into those levels. You're happy, look, from here to up into these levels, 150 pips. If it goes all the way up into these levels here, 300 pips. Still pips on the table, even if this market actually wants to come down. But bearing in mind, we are saying that this market actually wants to go up because it's a bullish market. We're at the bottom of this range, which is buy territory. Yeah, and this market might want to continue pushing all the way back up to the top of this line. The only concern we kind of have is the bigger range, which is this pink line and this pink line. We're sitting in the middle of that pink range, which is a much bigger range. But then here we still have the concern that does it really want to go up here first, or does it want to start going back down here? All right, which is why we have to read and react. Guys, any questions? Any questions about the session? Good. Guys, I'm going to play something educational. Thank you for being here. I appreciate Al. I don't know if Al's still there. Let's have a check. Al was here. He's no longer here. But guys, I'm going to say to you good morning. God bless. I'm going to stop for the people that are checking me out on YouTube.